Good morning, everyone, and you're very welcome to today's webinar. For those of you who have just logged on, we have already completed a sound test, and thanks to everyone who helped out with that. First of all, I want to introduce ourselves. My name is Holly McHugh, and I'm a marketing executive here at BrightPay. And also joining me to present today's webinar are Rachel Hines, who is the marketing manager at BrightPay, and Karen Bennett, who is the Chief Commercial Officer here at BrightPay. First, I want to look at the agenda for today's webinar, and we've divided today's webinar into two different parts. In the first half of today's webinar, we are going to look at the furlough scheme. In particular, the new changes to the scheme eligibility, which came into effect from the 1st of May, the upcoming changes to the subsidy rates, and we'll also look at the reference periods. And then for part 2 of today's webinar, we'll look at redundancies, vaccinations, and the workplace. Finally, at the end of the webinar, we will have a questions and answers section where we will answer any questions that you may have. For our questions and answers session, Rachel will be back on again to read out the questions, and she will also be joined by Victoria Clark, who is the Product Development and Training Manager, and Laura Murphy, who is our Chief HR Officer. If you do have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. This webinar is being recorded, and all attendees will receive an email later today with the link to the recording, so it's no problem if you do need to leave at any stage. Also in the email later today, there will be a copy of the presentation slides that we are using today. Or you can also download the slides right now if you wish on the Handouts tab on your control panel. We will also include some useful documents and additional resources that you may find helpful in the email later on today. Now that all of the housekeeping is out of the way, I'm going to pass you over to Karen to get started with today's webinar.
Thanks, Holly, and good morning, everyone. Apologies now, okay. So as more and more lockdown restrictions are lifted, many businesses are happy to be experiencing some form of normality. Unfortunately, depending on the industry that your business is in, many may not bounce back as quickly as other sectors. While some businesses will be returning to the workplace and implementing vaccine policies, others will unfortunately be facing into a few difficult months, and many businesses will need to avail of the furlough scheme until its very end in September. The government announced the extension of the coronavirus job retention scheme to September 2021 as part of the budget in March. With this extension, there have been a number of changes to the scheme, including a reduction in the levels of subsidy support from the government that will happen from July 2020 onwards. However, there are also some changes which took effect from the 1st of May 2021, including new eligibility rules and changes to the reference period used for these newly eligible employees. So first, I want to look at the changes to the rates of the government subsidy. Under the existing scheme rules, employers can claim grants covering 80% of wages up to a cap of £2,500 for the hours an employee is not working. Where the employee is not working, the employer does not have to contribute towards wages for unworked hours, but they are responsible for paying employer NIC and pension contributions. Where an employee is on flexible furlough, or also known as partial furlough, employees have to pay full pay for any hours worked. These levels of subsidy support will continue until the 30th of June 2021, but the government subsidy will change from the 1st of July 2021 as the scheme begins to wind down. For the month of July, the government will contribute 70% of wages up to a maximum of £2,187.50 per month for unworked hours. The employer will also have to contribute 10% of wages so that the employee receives 80% of their usual wages for any hours not worked, with a cap of up to £2,500. For August and September, the government subsidy will drop to 60%, up to a cap of £1,875 per month, with the employer having to top up the additional 20%, so the employee again receives 80% of their wages with a cap of up to £2,500. Employers must continue to pay employer NIC and pension contributions on the government subsidy for the hours not worked. Employers can also continue to top up their employees' wages above the 80% total and £2,500 capped for the hours not worked at their own expense. So as I mentioned earlier, the rules in relation to employee eligibility has also changed recently. For periods ending on or before the 30th of April 2021, you can claim for employees who were employed on the 30th of October 2020, as long as you have made an RTI submission to HMRC between the 20th of March 2020 and the 30th of October 2020, notifying HMRC of a payment made to that employee. So what has changed earlier this month? For periods starting on or after the 1st of May 2021, you can claim for employees who were employed on the 2nd of March 2021, as long as they were notified to HMRC on an RTI submission between the 20th of March 2020 and the 2nd of March 2021. You do not need to have previously claimed for an employee before the 2nd of March 2021 to claim for periods starting on or after the 1st of May 2021. And so this means that employees who started working for you on or before the 2nd of March will now be eligible for the scheme for claims starting on or after the 1st of May 2021. To be eligible for the grant, employers must have confirmed to their employee in writing that they have been furloughed, and you must keep a written record of the agreement for 6 years. Employers will decide the hours and shift patterns their employees will work, and so employees can work as much or as little as the business needs. And again, you need to keep records of how many hours your employees work and the number of hours they are furloughed for. For employees who are moving from full-time furlough to flexible furlough or vice versa, you will also need to agree on this with the employee and keep a new written agreement that confirms the new furlough arrangement. If an employee is already on flexible furlough agreement, this can be varied to reflect any variation in the working pattern agreed between the parties. The employer does not need a new furlough agreement each time the worker's hours change and can instead issue an amendment if there is a change in the working pattern. Employers can enter into a furlough agreement with the employee more than once. There is currently no minimum furlough period. However, there is a minimum claim period of 1 week, which we will look at in more detail in a few minutes. I'll pass you back over to Rachel.
Thanks, Karen. So next is calculating a Cjrs claim and determining what you can claim for. If you're in a position where employees are fully furloughed, you do not need to work out the employee's usual hours and their furloughed hours. However, if an employee is flexibly furloughed, you will be required to work out the employee's usual hours, their actual hours worked, and their furloughed hours for each claim period. And BrightPay provides functionality to calculate and apply furlough pay to an employee's payslip, and this includes support for flexible furlough. By entering the employee's usual hours worked and the actual hours worked into BrightPay, the software will automatically calculate the prorated subsidy. There are different calculations to consider when calculating your employee's usual hours, depending on whether they work fixed or variable hours. You also need to factor in the relevant reference period, and this depends on when the employee became eligible for the scheme. So first we'll look at employees who work a fixed number of hours. And for employees on fixed hours who were eligible for furlough under the original scheme, the usual hours calculation is based on their normal contractual hours at the end of the last pay period ending on or before the 19th of March 2020. And this is regardless of whether or not they were actually placed on furlough during the initial few months of the scheme. A different pay reference period exists for all other workers, that is, those who were not eligible for furlough under the original scheme. So, for example, new joiners after the previous cut-off date of the 19th of March 2020. For these employees, the calculation is based on the wages payable in the last pay period, ending on or before the 30th of October 2020, and the employee must have been included in an RTI submission to HMRC between the 20th of March 2020 and the 30th of October 2020. Where neither the 19th of March 2020 nor the 30th of October 2020 reference dates apply, the employee is not eligible for periods starting before the 1st of May 2021. However, if you made a payment of earnings to the employee, which was reported to HMRC on an RTI submission between the 31st of October 2020 and the 2nd of March 2021, they may be eligible for periods starting on or after the 1st of May 2021, and their reference date will be the 2nd of March 2021. It's also worth noting that if an employee with fixed hours was on annual leave, off work sick, or on family-related statutory leave at any time during the last reference period, the usual hours should be calculated as if the employee had not taken that leave. For employees whose pay varies depending on the number of hours worked, again, the usual hours calculation depends on whether they were eligible under the original scheme or not. For those who were eligible for furlough under the original scheme, again, regardless of whether or not they were actually placed on furlough, their usual hours will be the higher of the average number of hours worked in the 1920 tax year, or the hours worked in the corresponding calendar period in the year before the furlough claim period, or the look-back period. As we have passed the 1-year anniversary of the furlough scheme, for claim periods from March 2021 onwards, the corresponding calendar period in 2019 should be used as opposed to 2020 when calculating the usual wages for employees on variable pay, and this is also known as the look-back period. This is to prevent the issue where an employee may have been furloughed in the same month last year and so would only be receiving 80% of 80% of their pay. So for example, for May 2021, you should use the hours worked in May 2019 so that those employees who were furloughed in May 2020 won't be at a disadvantage. If your employee did not work for you in the look-back period for the month you're claiming for, you can only use the averaging method to calculate the 80% of their wages. For other employees, that is those who were not eligible under the original scheme, you'll need to calculate usual hours based on the average number of hours worked in the 2021 tax year up to the day before the employee's first day spent on furlough on or after either the 1st of November 2020 for those with a reference date of the 30th of October 2020 or the 1st of May for those with a reference date of the 2nd of March 2021. And I'm going to pass you back to Karen again.
So next, moving on to making a Cjrs claim, and employers need to make a claim through HMRC's online claim portal to avail of the scheme. BrightPay includes a Cjrs claim report, which can be used to ascertain the amounts needed for input into HMRC's online service. The minimum claim period is 1 week, and claim periods must start and end within the same calendar month. Therefore, pay periods that span 2 calendar months must be broken down into 2 separate claims. It will only be possible to claim for a period of less than a week if the period claimed for includes the first or last day of the month and a claim has already been made for the period ending immediately before it. Employers can make claims before, during, or after the payroll is run. Claims can be made up to 14 days before the end of a claim period. Employers can only make 1 claim per claim period, so you must include all furloughed and flexibly furloughed employees in the 1 claim, even if you pay them at different times. When claiming for employees on flexible furlough, employers will need to report hours worked along with the worker's usual hours in a claim period. Therefore, it is best to make a claim once you're sure of the exact number of hours your employee will work, so you don't have to amend your claim at a later date. Next, with regards to claim deadlines, claims must be submitted within 14 calendar days after the month they relate to, unless this falls on a weekend, in which case the deadline is the next weekday. The deadline for claims relating to April 2021 has already passed, so the next deadline is the 14th of June 2021 for claims relating to May 2021. HMRC may also accept late claims if you have a reasonable excuse, provided that you have taken reasonable care to try to claim on time and claimed without delay as soon as you are able to. HMRC has set out a list of various reasons that they consider to be reasonable excuses, and you can see them here on the screen. You must contact HMRC to ask to submit a late claim. You should do this as soon as you are ready to make your claim. And just to note, HMRC should only be contacted once the claim deadline has passed. If you have claimed too much Cjrs grant and have not already repaid it, you can repay it as part of your next online claim without needing to contact HMRC. If you claimed too much but do not plan to submit further claims, you can let HMRC know and make a repayment online. You must notify HMRC and repay the money by the latter of either 90 days from receiving the Cjrs money you're not entitled to, or 90 days from the point circumstances changed, so that you are no longer entitled to keep the CJRS grant. If you do not do this, you may have to pay interest plus a penalty, as well as repaying the excess CJRS grant. If you made a mistake in your claim that means you received too little money, you'll need to amend it within 28 calendar days after the month they relate to, unless this falls on a weekend or on a bank holiday, in which case the deadline is the next weekday. The deadline to amend claims for April is Friday, the 28th of May. If you haven't rectified a mistake in your claim by April, or for April by the 28th of May, but believe you have a reasonable excuse for missing the deadline, you must contact HMRC to ask to submit a late claim. Back over to you, Rachel.
Thanks, Karen. So next is employer compliance. And as part of HMRC's commitment to transparency and to deter fraudulent claims, details of CJRS claims are now being published monthly. The list of employers who have made a claim under the CJRS has recently been updated to reflect information for claim periods from December 2020 to February 2021. This list includes employer names, an indication of the value of the claim within a banded range, and the company number for companies and limited liability partnerships. The employer names used for the publication is the name associated with the qualifying PAYE scheme, and so it may not be the same as the company's trading name. The publication does not include employers who have made an application to have their details withheld, or those who have paid back the whole grant prior to the publication of the list. Details for claim periods from December 2020 to February 2021 are also available to employees in their personal tax accounts. Employees are being encouraged to report fraud to HMRC where they have evidence that suggests that their employer is abusing the scheme. HMRC's assumption is that between 5% and 10% of all claims related to the furlough scheme are fraudulent, and it's estimated that since the start of the furlough scheme in March 2020, over £3.5 billion paid to employers could be fraudulent or have been paid in error. Over the past few weeks, HMRC have sent letters to 10,000 employers to advise them that they may have made errors in their claims relating to the scheme. Given the significant investment by the government and the sheer scale of the suspected fraud, it is expected that HMRC will be relentless in pursuing those who have taken unfair advantage of the scheme, and HMRC are now aiming to collect double the amount wrongly claimed. However, HMRC do appreciate that mistakes happen, and they are not aiming to target innocent errors. Finally is what will happen when the scheme ends. The government had originally said that a new job support scheme would go live when the CJRS ends. However, given the extension of the furlough scheme until the 30th of September 2021, the job support scheme is unlikely to come into force. The government had also announced a job retention bonus. However, the bonus has also been shelved given the extension of the job retention scheme. It's unlikely that any further government subsidy or job retention incentive will be in place when the CJRS closes. So that's it for part 1 of today's webinar. Now for part 2, I'm going to pass you over to Holly, and here we're going to look at the HR angle, covering redundancies, vaccinations, and the return to the workplace.
Thank you, Rachel. The number of redundancies in the UK has accelerated at the fastest pace since the financial crisis. In the 3 months to January 2021, 308,000 redundancies were made, following 204,000 redundancies made in the 3 months to February 2021. According to ACAS, redundancy-related calls to their helpline have increased by over 160% over the past 2 months when compared to the same period in 2019. If you are in the regrettable position that you may need to make redundancies, here are some of the key points you need to know. When making an employee redundant, there are 2 key initial considerations. You have an obligation to behave reasonably in order to avoid unfairly dismissing an employee, and if you are making 20 or more employees redundant within any 90-day period at a single establishment, you must consult employees. These 2 obligations still very much apply, and the impact of the pandemic has not negated these 2 obligations. For the purposes of today's webinar, we want to focus on smaller scale redundancies, i.e. less than 20, where collective consultation does not apply. We have drafted the following steps in line with ACAS guidance. You should aim to avoid compulsory redundancies through voluntary redundancies, agreed short-time working, or other flexible staffing arrangements. You should also carry out a consultation. This involves speaking to every employee individually about why there are redundancies being made, and ideas and feedback on alternatives to redundancy. And it's important to ask employees for their thoughts as well. The consultation must be meaningful. Your plans must not be finalised at this stage, and you should aim to include any employee's suggestions or ideas you agree with. These meetings do not need to be face-to-face, and they can be held virtually or by phone. Next is selecting staff for redundancy, and employers should use fair and objective criteria when selecting employees for redundancy. Ideally, all employees at risk of redundancy should be put in a selection pool and assessed upon criteria such as standard of work, experience and qualifications, and disciplinary records. Selecting those who have been on furlough over other employees may not necessarily be fair. These employees may have been parents with childcare issues or individuals with disabilities, so there could be a risk of a direct or indirect discrimination claim. So once you have selected staff for redundancy, you need to give employees notice of their redundancy, and we will come back to this in more detail shortly. You'll also need to work out redundancy pay. Again, we will go into redundancy pay in more detail. And the final step is to support your staff. Redundancy is an extremely stressful time, so be there and available to take questions and support them. And it's also worth noting that employees that are being made redundant are entitled to paid time off to look for another job or complete training. Moving on now to notice periods and notice pay. Employees must be given a notice period before their employment ends, and either statutory notice or contractual notice will apply. The statutory redundancy notice periods are as follows. At least 1 week's notice if employed between 1 month and 2 years. 1 week's notice for each year if employed between 2 and 12 years. And 12 weeks notice if employed for 12 years or more. It is always advisable to check your contracts of employment, as the contractual notice agreed may differ to statutory notice. Where contractual notice is greater than statutory notice, contractual notice will apply. However, where contractual notice is less than statutory notice will apply. Statutory notice pay is protected, meaning that employees are entitled to be paid in full for their notice period. If the notice in the contract is the same or less than the applicable statutory notice, 100% of the employee's pay should be paid during the notice period. Amendments to the Employment Rights Act, which came into force on the 31st of July 2020, confirmed that employees that are serving their notice period while on furlough leave will need to have their salary topped up to 100% pay. However, things are slightly different where contractual notice is greater than the statutory notice period. If contractual notice is greater by at least 1 week, an employee should receive their normal full pay, as long as they are working. If they are not working, however, they should receive what they would have normally been paid for that absence. So if you have an employee who is out of work due to furlough and being paid at 80%, and this employee's contractual notice is greater than statutory notice, they may be paid at 80% for their notice period. For this reason, it is extremely important to always check the contract of employment. And now I'm going to pass you back over to Rachel.
Thanks, Holly. So there are two methods of paying notice pay to employees. You may retain the employee on the payroll and continue to pay them through their notice period. And it's worth noting that from the 1st of December 2020, the employer cannot claim Cjrs payments from HMRC during the notice period. Or the second option is you can opt to pay employees in lieu of notice. It's also worth noting that where a payment in lieu of notice is made, it is still subject to tax and national insurance. Normally, an individual is entitled to statutory redundancy pay if they are an employee and have been working for the employer for 2 years or more. The employee will be entitled to half a week's pay for each full year that they have worked under 22 years old, 1 week's pay for each full year they have worked when 22 years or older but under 41 years old, and 1.5 weeks' pay for each full year that they have worked when 41 years old or older. Where an employee's weekly pay varies, their average weekly pay should be calculated using the 12 weeks before the day they got their redundancy notice. Redundancy pay is capped with a length of service being 20 years. For employees made redundant on or after the 6th of April 2021, a week's pay is capped at £544, with the maximum statutory redundancy they can receive being £16,320. Redundancy pay, including any severance pay, under £30,000 is not taxable. As per employment law changes brought in under the Employment Rights Act on the 31st of July 2020, where an employee is furloughed or flexibly furloughed, if they are dismissed for reasons of redundancy, they are entitled to have their statutory redundancy pay calculated on the basis of their normal pay rather than on their reduced furlough pay. Average weekly pay is usually calculated by getting the average pay over the 12 weeks up to when the employer notifies the employee that they have been made redundant, However, under the new legislation, employers must treat any weeks an employee spent on furlough over the 12-week reference period as if they were working and on full 100% pay. In terms of processing a redundancy payment through BrightPay, we would advise that you create a new edition called Redundancy or Redundancy Payment. When creating an edition, be sure that you leave unticked tax can be deducted and national insurance contributions can be deducted. There is a preset edition called Termination Award available in BrightPay. You could also use this option, but if you made any changes to the title here, it will impact on any reports you might want to run. Therefore, the cleanest and most efficient way will be to create a new edition. And I'm going to pass you back over to Holly again.
Thank you, Rachel. Next, we'll move on to the vaccine policy. And this is such a topical area, and again, one that is changing by the day. We thought we'd approach this section as a Q&A which covers all questions you may have about the policy. First up, can you ask an employee if they have been vaccinated? While employees are not obliged to provide personal medical information, employers may request vaccination information. An employer's justification for doing so is likely to be in order for them to meet their legal obligations under the Health and Safety at Work Acts. It will be up to the employee if they wish to volunteer or provide this information to their employer. Employers should be mindful, if asking for this information, that there will be data protection considerations. Holding information on whether or not an employee has had the vaccine is likely to be considered a special category under data protection law. This means that the data is considered sensitive and additional safeguards must be put in place to protect it. Can you insist that an employee be vaccinated? So, whether employers can mandate their workers have the jab is still hotly debated. Currently, vaccinations are recommended by UK authorities. However, the government has said it is not planning on making the vaccine mandatory. It is likely to be very difficult for an employer to argue and defend a case that vaccination is compulsory in a workplace. Therefore, there is little an employer can do if their employee refuses to get the vaccine. Employers need to think carefully about any action they take and consider the potential legal consequences associated with these actions. For example, dismissing an employee with over 2 years service because they refuse to be vaccinated would likely be held as an unfair dismissal in a tribunal. So, what can employers do? Employers should be doing all they can to encourage employees to get vaccinated. ACAS have recommended that employers have open discussions with staff about the vaccine, as this could help reduce concerns employees may have. In thinking about how you might structure any such discussions, employers should seriously consider putting a vaccination policy in place. A vaccination policy can include a number of pieces of information. You could provide your workforce with a list of resources where they can obtain further information about the vaccination programme, for example, gov.uk and nhs.uk. You very much want to promote that employees make an informed decision. You will absolutely want to recognise individual choice. You want to be careful not to stigmatise or discriminate against those who do not get vaccinated or choose not to. You may want to reiterate that all COVID secure guidelines will remain in place as you move through return to work. Interesting, a Glassdoor poll found that 68% of employees wanted social distancing measures and mask wearing to continue after everyone in an office has been vaccinated. Your policy should clearly set out whether employees will be paid or unpaid for the leave to attend their vaccination appointments, and also if, as a result of being vaccinated, they suffer side effects and need to take sick leave, will they be paid? Clarifying your stance here can be very powerful in terms of encouraging staff to be vaccinated. To go back to the Glassdoor poll, 12% of respondents said they did not intend to be vaccinated. However, 1/4 of that 12% said they would be more likely to take up vaccination if their employer offered an incentive. Finally, it might be worth including something in your policy that reminds employees to respect each other's privacy and not to have open discussions about the vaccine with colleagues. Bright Contracts has recently been updated to include a vaccine policy which covers these consideration points for our customers to include in their employee handbooks, and this can be found under the Terms and Conditions tab. And I'll pass you back to Rachel.
Thanks, Holly. So we're now moving on to the final part that we're going to cover today, which is managing the annual leave backlog. And just a reminder as well that this is the final section. So if you do have any questions so far, feel free to type them into the questions box on your control panel. Key workers who are unable to take all of their statutory annual leave entitlement due to COVID-19 are allowed to carry over up to 4 weeks of unused holidays into the next 2 years. And while this flexibility is necessary to protect workers' rights, it has also caused an annual leave backlog that could become a real nightmare for employers to manage. Moreover, with some lockdown restrictions still in place across the UK, many employees have been saving their annual leave for when restrictions are fully lifted. This means that managers will likely be in a situation where many employees will request to take leave at the same time. Where possible, managers should allow the leave. However, they do also need to ensure business continuity. Therefore, it is important to balance the employee's requests about the timing of the leave against the needs of the business. To avoid a build-up of leave that employees will want to take when they are back at work, employers can require employees to take annual leave on dates chosen by the employer, as long as the employer gives twice as many days' notice as the period of leave the employee is required to take. Offering to buy back employees' holiday days that are in excess of the statutory minimum is another method that can be used. However, this method could end up being expensive and hard to manage for employers. So what's the best option for all parties involved? While it might not be possible to please everyone and give them their requested time off, it is important that you deal with annual leave requests in a way that's fair and transparent. By introducing BrightPay Connect, employees can access a self-service smartphone and tablet app, and this is where they will be able to request leave anywhere, anytime, directly from their smartphone or tablet, meaning they don't need to be in the workplace to request leave. Employees would also be able to view a payslip library, access HR documents, and view their annual leave calendar without needing to contact HR. When an employee requests leave, you will get a notification to log into your online portal to approve or reject the leave request. The most popular policy of granting annual leave is on a first-come, first-served basis. And with BrightPay Connect, you can ensure that this fair method of approving leave is implemented, as you will be able to see the order in which your requests come in. You can also access a company-wide calendar displaying who is on leave and when, so that you can ensure adequate staffing levels before approving the leave request. So here you can see there are 4 employees on leave on this particular day. If I go back to the dashboard again, I just want to point out that HR managers should not be the only people involved in the leave management process. You should also involve department heads, line managers, or even team leads to relieve you of the admin burden. By delegating the responsibility among department managers, you can free up time to spend on other important HR tasks, such as introducing a vaccine policy. Department managers are likely to have much better understandings of their project timelines and the deadlines than the HR department. And by allowing these managers to have control over leave requests, they can better manage their team's schedule and workload. With BrightPay Connect, you can set up an unlimited number of users, each with their own user permissions. So for example, department managers can be set up so that they can only view employees within their department, and you can also limit their access so that they can only view the leave calendar and approve leave requests without having access to the payroll information or HR documents. And once a leave request has been approved by the relevant manager, it will automatically synchronize to the payroll software on your desktop. One last thing I want to point out here is the documents. And here you can upload any type of document that you want to distribute to your employees. So for example, that vaccine policy, or even the likes of a company handbook or contract of employment. And documents and resources can be shared with individual employees, employees within a particular department, or all employees. And you can also send notifications to employees and monitor the date and timestamp of when employees accessed the resource or document. So it's a great way to communicate with your employees, but also to protect you as an employer. So I'm going to finish up there with the sales plug, but to be honest, that's only the tip of the iceberg when it comes to what you can do with BrightPay Connect. If you do want to find out more, we do run online demos of both BrightPay Connect and BrightPay on a daily basis. So please let us know if you want to book onto one of the free demos. So that brings us to the end of the presentation, and we've covered a lot on today's webinar, but we will send everyone an email later today with a link to the recording of the webinar and a copy of the slides. So it's now time for the questions and answers. And if you have any questions, feel free to type them into the questions box. And Victoria Clark and Laura Murphy are here to answer as many questions as possible. So the first question here, just bear with me as I bring them up. This one, Laura, is for you. Are employees stuck overseas still eligible for furlough?
Thanks, Rachel, and good morning, everybody. I'll give that one a go. Vicky, please jump in if you think I've missed anything. I suppose when we look at eligibility, though, the location of an employee was never specified in the eligibility for furlough, and we did get clarification last year that employees could travel abroad whilst on furlough. So I suppose I'd probably be asking a few questions there. Is the employee returning? Are they ready and willing to return to work, or is it a situation where they're going to remain overseas where they are and they're not going to return to the company, and then that would be a different situation. So I'd probably ask a few more questions there, I suppose.
Brilliant.
I agree, Laura. When I first saw the question, that was my thinking, really. I suppose there's probably a few questions to ask in terms of, like you say, availability for work, when did they travel, etc. So a little bit of a grey area, I guess, isn't it?
Yeah.
Great, thank you. Vicky, the next few questions seem to be for you.
Yeah.
If an employee was on the payroll but not paid anything eligible for furlough? If so, how is this calculated? The employee has not worked since November 2019.
Okay, yeah, so in this instance, it sounds like the employee did work at some point during the 1920 tax year, just with it mentioning that they haven't worked since November 2019. So in this instance, I suppose where a payment of earnings was made to the employee at some point during tax year 1920, then they would be eligible for furlough, and they would have a reference date of the 19th of March in that instance.
Great, thanks Vicky. Do you have to show the employer percentage on the pay slips, i.e. furlough pay 70%, then employer 10% contribution as a separate line on the pay slip?
Yeah, again, I can take that one. Yes, so I suppose when the rate does drop to 70% and then down the line 60%, then there is the obligation for the employer to top up. So yes, so the furlough pay will be showing on the pay slip, and that will be the 70% rate. And then what you should be doing, I guess, then is showing that in this instance, the 10% top up as a different line item. So it can be, you know, we have users who just do a gross pay item for the 10%. You could add an addition onto the pay slip and, you know, call it whatever you like, really, to identify that it's the top up amount. So there's various ways of placing it on the pay slip, but yes, you would need to show it.
Great, thank you. If an employee has two roles and two different rates of pay and are on furlough for one role but not for the other, how do I manage this?
Yeah, my thinking here is, I mean, I can only kind of second guess this a little bit, but assuming that the employee is on the one payroll and they have one pay slip generated each pay period, what you probably would have to be doing here is going down a flexible furlough route, so that the amount of time the employee is on the furlough for the first role, say, you know, you're putting them through for the furlough pay, and on the same pay slip then you could pay them the, I suppose, the amount for the hours that they are actually working in the other role.
Great. This one's a little bit long. What happens if staff are working less hours than originally because the salon is physically having to close earlier and therefore they can't possibly work their hours? I.e. furlough calculation in March 2020 was 42 hours. Now they are only able to work 39 hours. Can we now calculate furlough pay on the 39 hours, or do we have to use the 42? Obviously, staff will be better off if we use the 42, but we are going to have to start contributing on the higher amount for everyone.
Yep, so it would be the 42 hours that you're using in this instance. So you'll be looking back, if they're obviously there back in March 2020, again, they have a reference date of the 19th of March. So it's the reference pay at that, you know, basically, you know, if it's 42 hours every week, then it's the fixed hour rule that you're using to determine the reference pay. I mean, in this instance, it's 42 hours.
Great. If an employee is paid monthly, but hours of work are set weekly, i.e. 18 hours per week, do you calculate the furlough claim over the full monthly pay period or by weekly calculations, adding together the weekly furlough amounts to make the monthly furlough claim?
Yep, so I'm just, again, from just reading this a little bit earlier when the question came into us, it sounds like the employee is on fixed hours per week, so 18 hours per week. So what you would do here is, in determining the reference pay to use for your furlough claim, you'll be looking back at the, I suppose, what the employee was contracted for at the end of the last pay period, ending on or before the employee's reference date. So if that was a monthly payroll at the time, it would be that monthly pay that you would use there.
Great. If my payroll is 4 weekly and ends the 22nd of May and then the 19th of June, can I use Bright Pay to calculate the 1st to the 22nd of May in time for the June deadline? But my next pay run will be done the 20th of June, so I will miss the deadline to claim the 23rd of May to the 31st of May. Do I have to calculate manually and then make a separate claim on the HMRC portal?
Yeah, this is a common problem that people have run into basically since the deadlines have been brought in. Yep. Yes, I suppose what you'll have to do so that you don't miss the deadline of the 14th of June to claim for your remaining May days, you would have to just maybe do a manual return on the HMRC portal. What some people do, if you know, I suppose at the point when you're about to do your claim for those last few remaining days, if you know the pay already that's going to be going in for that June payroll run, you can always update the pay slips in BrightPay, ascertain your figures, and that, you know, obviously don't send the FPS until you're ready to do so, but you could then maybe use the claim reporting BrightPay just to get the figures you need for the portal. But yes, it's we hear that a lot actually, that it's, yeah, people are kind of sometimes having to guess. Maybe it's yeah, an issue that's arisen.
Yeah, quite an awkward situation, really.
Yeah, exactly.
Vicky, I'll give you a break now. I think there's a few questions here for Laura. Can you please explain why we should avoid voluntary redundancies?
I think that's our apologies, and maybe a slightly bit of confusion on the slide. Avoiding compulsory redundancies, and we had voluntary redundancy as an option, as a way of avoiding compulsory redundancies. So just to clarify that.
Great. Employees of a pub are returning to work this week and coming off full furlough. My question is, their hours are less than when on furlough because of shorter opening times. Should they claim furlough for the difference in the hours, or as this will be new hours going forward, there is no need to claim? If flexible furlough is the answer, what happens once the Cjrs claim scheme ends?
Yeah, I'm looking at this one and I'm thinking, I think there's probably a choice here for the employer. I suppose I'll take the end of it first. I suppose if flexible furlough is the answer, what happens once the CJRS scheme ends? And if at that time, when the CJRS ends, and the change in hours is a permanent change, then it's a contractual change. So you'll need to agree new terms and conditions of employment and change the contract. And that kind of still applies now. So it's up to you. Do you want to continue with flexible furlough and put through that element as flexible furlough, or do you want to start fresh and bringing employees back with an amended contract and agreeing the change in hours with the employee? So I hope that answers that question. But I'd be looking to change the terms, your contractual terms, and then that becomes the permanent change if it is permanent. If it's not permanent, maybe you want to consider the flexible furlough for a period.
Great, thank you. There's a few questions here on the notice periods. You can pay at 80% on notice, but not able to claim it. Is that correct?
That is correct if the contractual notice is greater by 1 week or more than statutory notice. So you have to double check your contracts of employment. It's really important to check your contracts of employment. So if I'll just take the example, if you have an employee who is with you 2 years, so statutory notice would be 2 weeks per year of service. So it'd be 2 weeks would be their statutory notice. But if your contract said they actually had a month's notice or 4 weeks notice, in that situation there, your contractual notice is greater than statutory notice. So, and if they are on furlough, you would be okay, you'd be permitted to pay 80% notice. 80% pay during their notice. However, if their contract said your notice is statutory notice, so 2 weeks, and they're with you 2 years and they're on furlough, then you pay at 100%. So it's really down to the contract.
Great, thanks Laura. There was a few questions in on that, so thanks for clarifying. Can the employer claim furlough pay for the final holiday entitlement for the employee who is leaving?
Yeah, I'd be careful with this one because the guidance is very clear that you cannot use the furlough scheme during the notice period. So I wouldn't go down the route of paying holiday pay in lieu of the notice. If you were doing that, I think there'd be questions. But if you were paying the full notice period at whatever the appropriate rate is, and then there's an additional holiday payment to be processed, I think it would be acceptable at that stage to put that through on Cjrs, but not if you were paying holidays in lieu of notice.
Great, thank you, Laura. If you want employee to go from 5 to 3 days per week, do they have to be brought out of their original contract?
I don't know if the term to be bought out of an original contract it's not really recognised in employment law, but it certainly is a change of contract, absolutely. So you would need to get agreement from the employee that you want to change their hours or their days. So hopefully you could do that through consultation and agreement. Failing that, worst case scenario, I suppose, would be to terminate and to re-engage on different terms. That would be kind of your last option, if you like, but that would be an option.
Okay. Can you recruit new staff when you still have employees fully furloughed?
Yeah, interesting question. There's nothing to say you can't, absolutely not. Just once you are being, I suppose, you can objectively justify why you are hiring a certain position and not bringing others. You don't want any kind of claims arising from it. But if it's a different role and different skill set and you have a valid justification, then yeah, I don't see why not.
Great. If a furloughed employee decides to leave and hands in notice while on furlough, can I claim under Cjrs?
I don't think you can here. I think, again, guidance is very clear. For any period of notice for an employee, that cannot be claimed under Cjrs.
Okay. And is it better to ask a group of people in an at-risk department if they would like to be considered for redundancy before selecting?
Yeah, absolutely. And that goes back to the first question there. If you have your group of, let's say, 5 people on a team, but you need to make 2 redundancies, you'll notify them all that they're at risk, and then through your individual consultation, if 2 of those 5 voluntarily came forward, wouldn't that be fantastic? So yes, I'd hope it'd be fantastic if you could get to that voluntary without having to select the people.
Great, thanks, Laura. Vicky, I have another few questions for you here again. If you have an employee who started working on the 28th of February 2021, am I right to think that they are eligible for furlough pay for May with a reference date of the 1st of May?
Yeah, but it all depends on when your full payment submission for that employee has gone through to HMRC. So to be eligible from the 1st of May, that employee must have been reporting on an FPS on or before the 2nd of March 2021. So hopefully they have made that, and that maybe they haven't maybe been paid a week later, for example. So I hope, yeah, that falls well for you.
Okay. Can we claim furlough pay for periods from the 3rd until the 7th of May, or should we claim it from the 1st until the 9th of May, which includes weekends?
Yeah, claim periods need to be, I suppose, a minimum of a week, unless the claim dates that you need to claim for at the start of a month or the end of the month, and sometimes obviously a calendar month isn't like full week, like 4 or 5 full weeks. So only in that instance can you claim for less than a week, these little orphan days. So mid-month, so say you mentioned there the 3rd, so it would have to be maybe the 3rd to the 10th, for example, or you could go from the 1st to the 9th there, that would be fine too.
Great. Thanks, Vicky, and thanks, Laura, as well. I think that's all the questions answered today. I'd like to thank all the attendees for joining us for today's webinar, and we hope you found it useful. As I mentioned, we will send out an email later today with a link to the recording of the webinar and a copy of the slides as well. So thank you. Bye.